This is Mark the Meerkat in for D7 with the abbreviated holiday review of the markets here at Grok Trade. All right, this is Mark the Meerkat. Hey, just in, Vez is out in Las Vegas on business, so hey, I'm going to cover for him. I'm going to do an abbreviated version here of the weekend review. So let's take a look. What happened on the markets this week? Let's take a look on Friday, and then we'll pull back and look at the week, and then we'll pull back and look at what's happening in the first quarter here. So, I'm sorry, the first half of 2019. So we've got the S&P 500 just closed up slightly on Friday, and then the Dow Jones Industrial up 0.3, the Nasdaq up 0.1, and the Russell bounced back up 0.8, leading the cash markets up, and Bank up big here at 1.3%. And look at that VIX. It ended up closing down 6% on Friday, so some of the fear came out of the market. Even though we have this long weekend here, and with all this geopolitical news out there, who knows what will happen over the weekend. So kind of surprised that that actually dropped, but again, doesn't matter what I think, folks. It's what the market's going to think. That's what's important there. So let's take a look here at the daily chart here on the S&P 500, and a close-up view here. What has happened here? We had a symmetrical triangle here forming, and Des had still had the buy on as of last week, but then here I'm ready to put now today here I'm ready to put on the let's see here, let's space the icon here and bring this over. I'm ready to put on a sell now. It has now broken down below this line of support here, and we're now in the sell mode here on the S&P 500. Now that doesn't mean we're in a downtrend yet, although we have a lower swing low, and we now have a lower swing high. We're ready to go into a downtrend. But here's what has me concerned here. We've got this, we have another possible support area here. So we're taking it back from this low here in early March, and then we do it to connect it to this low here. Look at that. We bounced right off of that area. So another symmetrical triangle forming here. And again, if it breaks below that support area, and then the other area I'm concerned about here is the 2800, which was resistance here, support right here, and now bounced off of it here, and now it's come right back to this area. So this 2800 is a major line of support and resistance on the daily chart for the S&P 500, and we have the 200 moving average just below that. So we have three lines of possible support here for the markets, and they work every single time except when they don't. So we have a bearish, even we're technically still in an up trend, we're definitely in a down leg here, and we're about ready to get ready to go short on the markets overall for the trend here. We are in distribution as well on this market. So that's the S&P. Let's take a look at the Nasdaq real close. And it too just drew in this line here from last week, and it just broke down below that line on Thursday. And again, it's a lot more bearish here right now. It did make some recovery on Friday, just barely. And again, we did put a sell on that here last week. Des did on that one. And then here's the small cap Russell really lagging the way here. I mean, if we have to pull this and take a look where the all-time highs were, it's way up here. It fell very much short of the all-time highs. It too had it was a symmetrical triangle here that it broke down from early this week, and then look at that, still falling below even this symmetrical triangle. If we redraw that in, bam, bam, bam. But I want you to notice here, what's this is a bullish harami. We have the bullish harami not only on the Russell small caps, we also have a bullish harami here on the S&P 500 and actually on the Dow as well. So we have a bullish harami, which is a possible reversal candle. You're in a down leg and you get a harami. It's a possible that it could bust to the upside on the next day of trading. Probability wise, it could be going up. All right, so those are what we see there. Let's go to the weekly charts here. Let's go to the S&P 500, and let's go to the weekly chart, and then we'll come back and pull back here on the S&P. So on the weekly chart here, we were in a rising wedge, and then it fell down. Again, this line is here drawn from the daily chart. And we have had 3 weeks now that we've pulled back, and we're back here to this that 2800 line of support area, which it tagged during the week. This is on the weekly chart here now. We're still above the 50 moving average and right at the 20 moving average on the weekly chart in the S&P 500. Then we have the Nasdaq here. Again, it came off its lows. It's dropped here a little bit more than the others have. And it is pulled back right to the 20 moving average is where it closed on that weekly 20 moving average. And then we have the Russell here. Again, you can see how weak it has been. It did not even come close up here to double top at the 1600 area, and it's pulled back for the last 3 weeks here. Now below its 20 moving averages, 50 below all the moving averages except for that the 200 moving average, which is way down here. So looking a lot more bearish on the small caps. Bank here also for the week here, it's continuing to drop 3 weeks in a row below its moving averages except for the 200 moving average as well. So the Russell and the bank are looking a lot more bearish than the rest of the markets, and that can be a kind of a canary here telling you, hey, the markets are much weaker than they appear when you're looking at the small caps in the bank, when they are not even coming close to where the other markets were. All right, I want to go back here to the daily charts here, and let's pull back and see. So everybody's like, oh, we're in this big pullback, we're in this big pullback. All right, well, let's not panic quite yet here. Let's pull back and take a look at the whole year here on the S&P 500. So back here in January, we made this huge run up here. Since January, let me play a little bit more so it's a little bit bigger. There we go. So take a look here. So we've ran up, but it's kind of what we call a rolling market. It's going up, pull back a little, pull back a little, pull back a little, and then as soon as the tariff talks started and all the geopolitical news started kicking in, then things started to pull back. Well, we have pulled back, but nothing compared to the pullback that we had. Look back here. We were up here at highs and we dropped all the way down here 20%. So we're not experiencing that yet. We are pulled back here, and we're staying above that 2800 area, and we're pulling back. We are jumping around here a lot. Now I'm going to get on a soapbox for a minute. This news-driven pullback, it's all about the tariffs and China trade and other geopolitical news that's happening. Brexit with Prime Minister May now resigning because she couldn't get Brexit through. We've got increased tensions with Iran, and that has real effect on oil and everything else. I mean, oil pulled back just 5% on one day this week alone, down over 6% for the week. So and then the chip stocks were down 6% this week, and then the chip stocks over the last 3 weeks since the 1st of May, when all this talk started, down 16%. So that has really pulled down the markets, and it's news driven. A tweet comes out and the market swings several hundred points, and so this is a tough time. Cash is okay in a market like this until it decides to take a direction. For me, my cue is going to be if it drops below that 2800 and the 200 moving average on the S&P, then I'm going all shorts, baby. I'm going all shorts at that point. But right now, there's a lot of lines of possible support in the markets, and the earnings have been coming mixed. Retail has been suffering a bit, but and the chip stocks, of course, are way down based on the tariff news more than on its earnings. All right, so that's pulling out for the whole week here. Let's take a look at the Nasdaq pulling all the way back again. It dropped. It had been riding up here, and it fell right out of that rising wedge as expected, right back to this area here, staying above the 200, but below the other moving averages on the daily chart. Again, the 7600 is a line of support area, and the 7600 is a kind of a telltale line here. If it breaks down there, which we're right at that line area now, then it could be possible short situation. Again, the Russell here, it ran up, but it did not continue to run up since it ran up till February, mid-February, and has been going sideways ever since. Now it is already broken down here. The small caps, yeah, I'm looking to short small caps here pretty soon here. Below the 1500, we're definitely going to be going short. So that's kind of pulling back and look at the markets in a much bigger view. Now, so the markets are technically still in an uptrend, but just barely right now. We're transitioning to looks like maybe a possible downtrend here as the market continues to move downward, primarily on news. And so, again, it doesn't matter what we think; it's what the market thinks that is important there. Again, I'm getting my shorts ready to go. Yes, I have stopped out of a lot of my longs and my swing trades, but then and right now I'm in cash in those areas until this market decides to make a trend in one way or the other. So this is a long weekend. The markets will be closed on Monday for Memorial Day here in the U.S. If you'd like to increase your knowledge about trading, we have 3 different webinars you can attend for free if you'd like to do that. So let's go. You go to groktrade.com, and at groktrade.com you have several different webinars that you can attend. These are ones on trend line, a market maker, or a hedging class. Those you can pay for, but here are the free ones right down here. Just could continue on down. We have how to build your wealth at trading. Again, it's a free webinar there talking about that, what success factors and things that you need to set up to have a successful trading business. How to win at day trading without buying those real expensive education programs. And again, that would be if you can be in front of the markets and you're interested in day trading. I'd run the day trading chat room. That's a webinar right there. And how to find the great trades. There's over 7,594 stocks and ETFs on the market right now. Which ones should you trade? How do I figure out the ones that are best to trade and when to trade them? So this is a free webinar. It tells you how to, we start to give you, ideas as to how to sort it down to those that are the most likely to move up or down depending upon the trend of the market. So those are 3 free webinars you could attend this weekend if you have a little bit of free time, especially if it's in clement weather at your area, as it's turned here in the Toledo, Ohio area now. Beautiful yesterday, not so much today. All right, that's it for this week. Again, we are in a transition part of the market here, which in distribution has been pulling back and about ready to turn into what we call a downtrending market here. So get ready with your shorts let's get ready. Yeah, it is the unofficial start of summer here, but let's get our shorts out and be ready to trade the market, because we here at Grok Trade, we trade what we see, not what we think. And to all those veterans out there, we're going to honor you on this Memorial Day weekend, especially those veterans who lost their lives in protecting our freedom and our liberties. Until next week, trade well, and may your winners run.